I want to bring in our panel to dive into Uber's latest quarterly report card. Joining us today, we've got Randy Hare, Director of Equity Strategy at Huntington Private Bank, and Ivan Feinseth, who's a Senior Partner and Chief Investment Officer and Director of Research at Tigris Financial Partners. It's good to be with both of you. Randy, let me start out with your take on Uber's results. So they did beat expectations, and, bookings for the next quarter, some would say are in line, some would say are a little soft in terms of the growth trajectory. What's your take overall on its results?
Overall, we liked the quarter. There was a little more strength in the Uber delivery. A little bit lower margin business, so the margins were a little bit of a concern. But overall, it was a good quarter. Stock's trading down with the market, but it's more of an opportunity here.
I was wondering that if some of it was just kind of the general direction of the market because, those numbers look pretty solid to me. Ivan, I want to get your take on Uber. I mean, to be fair, it's had a year where it has outperformed the S&P 500. I wonder if there's a few factors going on, if there's potentially some profit taking along with this kind of broader market momentum.
We've had a great run in the market, in the tech sector, in a lot of these concept stocks, like Uber and, like the AI stocks. So it's not unusual to have a pullback. And the market right now is kind of cautious. Then they tend to sell stocks on any, slight cautious commentary from the CEOs during their earnings call. But overall, I agree with Randy. The quarter was great. And, the real play, the sizzle on Uber is robo-taxis. And while we still are a ways away, they continue to test robo-taxi services and continue to roll out more cities where it's available on a test basis. And they continue to build their partnerships. Another stock that I like that's starting to ramp up in 26 with more OEM onboarding on their technology is Mobileye. Mobileye is an enabler of robo-taxi and autonomous driving capabilities, and they have partnerships with Uber and Volkswagen to deploy these Volkswagen minivans as well as empowering the robo-taxis. So I think that's has really been, the future of rideshare and the robo-taxi service. And while it's a ways away, that has attracted a lot of investors in the stock.
So the CEO had some commentary today. Dara Khosrowshahi said on the call with investors, quote, I expect that AVs, autonomous vehicles, won't be profitable for a few years going forward. I imagine that threw a little bit of cold water, too. What's your thought, Randy?
So that ends up being Uber's plan. They invest in unprofitable business. They subsidize it, grow it to scale, and become profitable at it. So it's not something outside of their plan. Yes, it's a little bit of a disappointment. Profitability is important. The share buyback's important.
Ivan, what's your take on those comments? Does it elicit any concern for you? And do you think some of the reaction in the market today is, just a little bit of a overboard?
Yeah, it doesn't bother me. In fact, you got to look at these pullbacks and these sell-offs as a buying opportunity to add to your position or to get in if you've missed some of the run-up. So, that new and emerging technologies do take some time to become profitable. They do need a lot of capital investment in development. There are fits and starts in optimizing the process and the capabilities. So that's all normal when you have this emerging technology, which, is intriguing. It's interesting. I've done several rides in I've done Waymo and a lot of these different autonomous concepts. It is pretty cool, but it will take a while for total optimization to where it works perfectly and adoption. But it will be a powerful driver of Uber's and the rideshare industry, including Lyft's future growth.
And I don't think that was a pun intended there. It's interesting that you have taken one of those rides because I was talking to a buddy of mine recently who was traveling in California, and he was in a regular Uber, and he said next to him were all these, there were vehicles that were driverless, and so seeing no one in the, in the driver's seat of these robo-taxis, he was startling to him, and he told his Uber driver he wanted him to speed up because he was like, it kind of freaked him out. But let's talk a little bit about free cash flow at Uber, Randy. So their free cash flow hit $8.5 billion. When you think about a portfolio strategy standpoint, How sustainable do you think that is? How durable do you think that is?
We right now give management the credit of reliability, that they'll be able to sustain the free cash flow, invest in the future technologies like they are, and then continue to be profitable. They've been profitable for 3 years now. It's a good path to be on.
I want to talk a little bit about the loyalty programs. They lean into that. I participate in one. Ivan, every time I think about leaving Uber One, they go, "Are you sure?" And I go, "I guess not." And I stay with it. I wonder what it is about it that's sticky and how it compares to, say a Lyft or DoorDash loyalty program.
Well, loyalty programs are a powerful driver of the customer connection and repeat business, and everybody likes to earn points and rewards and go, to rise through the status tiers. So that's, keeps you engaged. It keeps you loyal, which is the goal of the program. And I try not to spend a single dollar that doesn't in some way enhance a frequent flyer or loyalty program in some way. And I think it keeps customers engaged. It certainly has worked well for the airlines, and it has expanded into so many different places that these companies actually can create their own ecosystems. And Uber, in April, won the contract with Delta, which has one of the best loyalty programs, and replaced Lyft. Delta originally had the partnership with Lyft, and now they have the partnership with Uber. And as I said, Delta really leans in hard to their loyalty program, and it is one of the best. So the more things they add to it, the more it does drive the inclusion in their ecosystem and the growth of everybody that participates in it.
Quick final thought from you, Randy. For the retail investor, which is a big part of our audience, when you look at this dip today, is it a buy the dip or wait for clarity on autonomous?
It's a buy the dip. Valuation's reasonable, growth is strong. I would buy the dip.
All right, we will leave it there. That conversation on Uber. Shares under some pressure today, down almost 6%. That's Randy Hare from Huntington Private Bank alongside Ivan Feinseth from Tigris Financial Partners.